You know, I'm going to be talking to Phillip Patrick in a second, and I got a bunch of questions for him. I'm very much interested in how the economy is going to be affected by the war, because, you know, oil prices are going to be, changed as a result of this Iran conflict. And he's going to give some important data on that. And I've got Mercedes here in the studio with me, and you're going to be giving us some of your commentary. And I think that Birch Gold is still, after 70% increase for the last 2 years, like 40% or 35% in the last 1 year alone, I think gold's still going up, but I'm going to find out from him. But I want to get that whole global economic shakedown perspective. And I think this next 12 minutes is going to give you a world of information you don't want to miss. And don't forget, you can get your IRA, you can convert it all over without any taxes and without any penalties. Just go to lancewallnau.com/gold, and you could get a hold of a Birch Gold consultant and a free profile or a free report on the dying dollar and what's actually happening with the dollar right now and the BRICS nations. All right, you don't want to miss that. That's lancewallnau.com/gold. Let's get into today's interview. Folks, you know, you can't hardly get a news cycle out before you have an update of something else happening. But I'll tell you what, President Trump just left the G7 up there in Canada and refused to sign the paper that says that he was calling for an immediate cessation of conflict between Iran and Israel. Why did he decide not to sign that? Because the work isn't done till there's no nuclear threat coming out of Iran. And so that's going to affect. Now the world is all interconnected. I got Mercedes here. She's interconnected in the studio. Hi, say hi, Mercedes.
Hi, everybody. So
what happens, Mercedes, is like Steve Bannon was saying, hey, the way to solve the problem with Iran is, you do an oil embargo, 100 days, it collapses the economy. And of course, then China gets their oil from Iran. So they're affected by that. And what all that means is the world is vastly interconnected. And of course, you got the BRICS nations. And I'm not nearly paranoid as much as people are about Brazil and South Africa and, coming together and taking on the mighty dollar. But I am aware that oil and the war between Iran and Iraq can have a destabilizing effect economically. And of course, I'm interested in how that ties into gold, silver, precious metals, et cetera. So we bring our expert for these questions, Phillip Patrick. Thank you, brother, for joining us.
Thank you for having me.
So my question is, over the last few days, Israel launched a direct attack, obviously. How is the escalating conflict affecting the global economic picture? Because it's all interconnected. What do you see?
Look, I think this is a massive development. I think it has far-reaching implications. We have to understand when any time a regional conflict turns into a broader war in the Middle East, you see immediate response in energy markets, right? And we saw that straight away. Oil prices jumped 7.5% on Friday, and energy costs or rising energy costs feed directly into inflation globally, which is a problem around the globe. Secondly, this sort of instability creates fear in the financial system. Investors immediately start to seek out safe haven assets. It's why gold grew 1.5% directly on the news of the conflict. So from a broader perspective, I think this regional instability adds fuel to the existing inflation concerns that we have here in the United States. We have tariffs obviously driving the price up. Oil prices are hugely inflationary, so it could add to problems domestically and around the globe. We have to remember major economies are already strained, right? Europe's in recession. China's growth now is spluttering. Our GDP growth in the first quarter was negative. So, geopolitical shocks like this, they don't create economic crises, but they put pressure on the existing financial system. And I think they make the cracks worse. And we're starting to see that play out, I think.
Yeah. And so so Iran has been targeting just residential communities. And I think people need to know this, that Israel is trying to excite a domestic overthrow of the regime, so they are avoiding as much as possible any civilian casualties that could stir nationalist resentment. But Iran is targeting Tel Aviv, the population centers. And the reason I say that is because Israel warned them, if you escalate this by continuing to target. Unfortunately, they're taking out the sites. Like 35% of the missiles launching sites are taken out. As soon as they launch, they could target where it came from, and boom. So they're reducing their power, Iran's power to send missiles. But the ratcheting up of the consequence is they're now hitting infrastructure, which means power stations, gas, oil, and as I understand, Patrick, Philip, the 40% of the economy of Iran is dependent upon oil, but China is usually dependent upon Iranian oil too, aren't they?
Yeah, absolutely correct. Look, I think the idea from the Israelis now is cut off the money supply, burning the oil fields. They've done it before. They can do it again. It's going to restrict the regime's ability to fight. And like you said, Israel are being very targeted in their response. So I think so far it's being managed well, but my focus is obviously on the economy. Iranian oil fields burn. It's going to have effect on global oil prices, which we've been seeing, and ultimately will drive the price up. People have to remember oil is the most inflationary commodity because it's used in the production and transportation of almost every other commodity. So financial markets are watching closely to see how long this develops and how long it lasts.
And all this coming at a time, Mercedes, when the president is trying to get the Fed to drop the interest rate, and his argument is getting undercut because inflation went under 3% last month, despite tariffs, and so that should be good news. But now the Fed could say, well, we have to wait to see how this plays out.
Yeah. Well, and Philip, what do you think about that? I mean, in terms of where are we at with interest rates? Not only do we have to worry about like a third world war and the cost of gas going up, but we still have the inflation at home. Where are we at with that? Is what Lance saying accurate?
It's absolutely accurate. Look, inflation numbers are coming down. On top of that, there is an argument for the Fed to lower rates, right? Businesses, GDP was negative for the first quarter. We're seeing issues across the board. Spending is down significantly. So there is a strong argument now with inflation taming and the economy struggling for the Fed to lower interest rates. I think they're going to be hesitant to do so. They're worried about a few things. First of all, this conflict in the Middle East will be inflationary. The Fed know that, so they're worried about cutting rates too soon and seeing a spike in inflation. Secondly, obviously, tariff policy is underway. Tariff policy will raise prices, right? It hasn't happened significantly already. I think a lot of companies are eating a loss of profit, not passing on to consumers. But ultimately, if tariffs work, they will raise prices. So I think the Fed know inflation will rear its ugly head, and they're hesitant to cut too soon. So between now, certainly over the summer, I don't see a rate cut on the horizon.
Yeah.
Towards the end of the year, we may or may not, depending on what happens to inflation. My fear is we see a spike and the Fed hold firm. That won't be good for Trump in terms of debt service or trying to grow the economy. But at the end of the day, the Fed's responsibility is to curb inflation and keep employment. They're not responsible for debt or money printing. So.
Well, and so Philip, one of the things like we've been talking, I mean, you've been with us for almost a year and a half now, 2 years, I want to say. And so we bring you on because as all the economic uncertainty is happening, and like we've seen over the last 24 months, the price of gold goes up. When you have all of this economic uncertainty, people take cash and move it into other commodities, and gold and silver are some of the best ones. So talk to us about, hey, what does that increase look like? Why is gold such a safe place to store some of your cash, so you protect against inflation?
And just so my audience gets this, what's the relationship between the value of the dollar and gold? Because I think there's a correlation there, but unsophisticated. I mean, I had a guy come up to me the other day, Mercedes, and said he had over $500,000. He wanted to ask me, where's the best place to buy silver? And I thought, brother, that's not the question. You want to ask to a specialist about where's the best place for $500,000, not where's the best place to get silver. So my audience, they're aged out, many cases retired baby boomers who were never involved with sophisticated investing, but they have cash and they're nervous. So first of all, what's the relationship between the dollar and gold, and what's the future you see for the dollar? Because I know there's a connection there people need to get.
Yeah, great question. So first of all, gold and the dollar have a directly inverse relationship, right? When the dollar falls in value, gold prices go up in value. It's directly inverse. The reason for that is very simple. Gold's buying power throughout history has remained consistent, right? As you know better than me, you look back at religious scriptures. 1 ounce of gold back then would buy 400 loaves of bread. Today, it does essentially the same thing. So the key thing for people to understand is it's not gold's buying power that is changing. It's the value of the dollar. The more money we print, it devalues the dollar. And essentially, as dollars become weaker, we need more of them to buy the same ounce of gold, which is consistent. So the relationship between the two is directly inverse. The dollar question is a bigger one, right? Gold is obviously performing aggressively. We've seen, I think, over 30 all-time highs this year alone. So it is consistently going up. And there's a number of reasons for it. First of all, it's global recession, right? We have inflation globally. We have, major economies struggling. In times like this, people flood to safe haven assets. Now, for most of this century, the traditional safe haven asset has been US government debt, but it is less attractive to investors now. They are replacing it with gold. The second thing is de-dollarization globally. Listen, I know, Lance, you don't have a big concern with the BRICS. I do. And I want to be clear on my perspective. I don't think that we lose our global reserve currency status short to medium term. What I do think we've been doing is disincentivizing countries to hold our dollars, both through devaluation of currency and weaponization of currency. The US is 25% of the world's GDP, but it attracts 60% of the world's capital, right? We overperform in that respect. What we're seeing now through tariff disputes, through weaponization, is countries say we need to start diversifying away from the dollar. It's the same reason that gold became the #2 global reserve asset last year. Countries are looking for solutions. My concern is this: the more that happens, the weaker the dollar becomes, right? If we start to see a viable alternative in the future, that's when we risk the status. But for me, if this trend continues, it'll be a gradual devaluation of the dollar. It's the same reason central banks are buying gold today. It's to hedge that dollar exposure.
I fully agree with you. And as I said on earlier broadcasts, that while we in America love to see Trump, be the tough guy with trade and all that stuff, the reverse of that is every time we use currency as a vehicle of political exertion of our will, we create resentment. And it's clear that countries want to get away from that manipulation. So gold is going to keep going up. I mean, go ahead, Mercedes. She's waving at me.
No, I just was going to say, because we're coming to the end of our segment, but I wanted to talk about, we're talking about how great gold is as a store of value. It's gold, it's silver. And of course, one of the more shrewd things to do, if you're really in tune, is these gold-backed IRAs. So I just wanted Phillip to talk a little bit about, if you're interested, if you're listening, you're worried about, hey, I do have cash, I have a little bit of money here, or I have my retirement account, what's possible? Phillip, can you give us a little bit of a rundown?
All right, let's run over a minute. Go ahead. Answer that question. Why is a gold-backed IRA such an important option?
Look, most of us right now, everything's getting more expensive. It's hard to save money. And the IRA traditionally is a very good vehicle for people to do it. So for a lot of the people that we deal with, they've built up this large exposure in their retirement accounts that needs to be there for their retirement. And they're struggling now with options, right? Cash is losing largely in real terms to inflation. There's a lot of problems with global financial markets. So people are looking for a way to protect retirement accounts. And under IRS tax code per US law, we are allowed. So your viewers can move any portion. It's not an all or nothing thing. They can move any portion of an existing IRA. We can place physical precious metals in there, not a paper version, not an IOU, but physical metals that those customers own and can control within a retirement account, tax deferred and penalty free. So it's a way to preserve our retirement and hedge our exposure so that our money keeps pace with the cost of living and we don't lose on the back of a falling US dollar.
It's so good. And, I like this. And it's one of these, the biblical principle of my people are destroyed for lack of knowledge. And so one of the things we want to bring you guys is the exact same stuff that Lance and I do, is that, and what Philip's talking about, it's not all or nothing. It's called a diversified portfolio. You want to have cash. You want to look at something like gold, silver, and then even like other things we talk about is real estate. You want to have a diversified portfolio because the economic uncertainty, the storms happening around us, but one of my favorite Lance quotes is that God gave Noah a plan for a boat that would float. So when you go to lancewallnau.com/gold, download the book that's there. It tells you, it answers a lot of your questions. But one of the great things is somebody from the Birch team is going to reach out and answer questions that you have. They'll probably call you within, sometimes it's 30 minutes, sometimes it's an hour or two, but they want to make sure you have your missing piece. So don't be destroyed for lack of knowledge. We try to bring you the exact same things that we're doing and that we support and endorse.
Couldn't have said it better myself. Well, thank you again, Phillip Patrick, for being with us and always being available.
Thank you, Phillip.
We're entering a period of time that has increased hostility against people of faith. It's a time when Christians are going to be tested on a moral, physical, psychological, and even a financial basis. I'm here to remind you that God is the one who has blessed you thus far, and He will take care of you in the future. You have a divine responsibility, however, to see trouble and prepare yourself. For example, with record inflation eating away at the value of the US dollar, the savings in your retirement account is in danger of slipping away. I recommend diversifying your 401k or IRA out of paper assets and into physical gold. And the best way to do that is with a gold IRA from Birch Gold Group. Now that includes no penalties, there's no taxes when you transfer current retirement funds into Birch Gold. To see how it works, I want you to go to lancewallnau.com/birch and get your free info kit, and you'll be glad that you did.
Did you enjoy this latest episode? Please remember to share it with your friends, because the more knowledge you have,